are, and we'll take weekly options as examples wherever we need to analyze these dynamics. So weekly options are options that start trading on every Thursday. You have weekly options on all the major stocks. So you have weekly options on the Googles, Priceline, Apple, and many ETFs as well. So you'll have it on the Spiders, on FAS, and several other ETFs, all the big ETFs which have a lot of volume and liquidity. They start trading on Thursday morning and they finish trading the following Friday after the market closes. So they have a total calendar days of 8 days, starting from Thursday to the following Friday. And in terms of actual trading days, they have 7 days, because you have Thursday and Friday of this week, and then you have all 5 trading days of the following week. So they trade for 7 days, and as you can imagine, as we approach expiration, we know that all the Greeks start going crazy. So in general, when options reach the final month before expiration, they start to lose their value in an exponential manner. And we've seen this in the course on time decay, and we even analyzed Apple options, and we saw how from 60 days or 90 days away from expiry, we saw how option prices behave, we saw how time decay affects those kinds of options. And then as you come closer, we saw that when you approach about 30 days, then these options really start losing value. But it's not just about time decay. You have 3 out of the 4 Greeks are going to start behaving in a fairly intense manner, and those 3 are Delta, Gamma, and Theta. And Vega, which in general over an option period's life, Vega is an extremely important component, and Vega actually could affect option prices in a significant manner. But as you approach expiry and in the final 1 month, Vega starts losing its impact. And that's because, as you have very few days left for expiry, obviously the chances of the stock or the ability of the stock to move around in a very volatile manner gets reduced. However, that's not to say that, that kind of volatility is not going to happen. It's just that the impact of Vega gets reduced. But obviously, if an option has 30 days to expiry, then you can be sure that Vega is going to impact that option quite a bit. But it's just not going to be as heavy as there were 60 days left to expiry or 90 days left to expiry. And obviously, time decay is so theta is going to become a pretty significant factor as you approach expiry. And when the option enters the final 30 days, that's when you can see all these 3 Greeks, the Delta, Gamma, and Theta, start to become a lot more intense.